guys, welcome back to the Mortgage Update with Dan Frio, and I, of course, am Dan Frio, and today is September 24th, 2019, and if you don't follow my channel, or you don't know who I am, I'm actually a mortgage lender in the Chicagoland area. I have been doing this for 30 years, and I have a radio show, actually 2 radio shows on in Chicago, so if you watch my YouTube channel, I post all those radio shows, and they show up as, in most cases, as podcasts, and I'd love to help you if I can. I'm licensed in almost every state in the country. So I'd love to help if you're looking for any financial needs or mortgage needs. So what people do mostly is when they follow my channel is I watch the markets for you on your behalf, and I try to educate you on what I think the mortgage rates are going to do and just kind of keep you abreast of what's going on in the markets. Channels followed big by realtors and other mortgage professionals and used in a lot of training sessions to teach people about the MBS market and interest rates and a whole bunch of other stuff. So today what I want to talk about is I go over the market. So what happened in the stock market today? It didn't have a very good day today. The stock market was down 141 points. You can see that here, 142 points, and you pretty much see red across the board. It wasn't a very good day there. Over in the bond markets, you see the 10-year is up a little bit, the 2 years up a little bit. Nothing really dramatic there. Oil prices are down a little bit. So mostly everything, the markets, stock markets were down. There's some uncertainties in the market right now. So it's pulling money out of the stock market and into bonds. And that's where you'll see all red here, all green here. So let's go. What happened today in the mortgage rates? Okay, so you just see here, there was a bond auction today. It had average demand. But a lot of the stuff that we talk about on the channel is technicals. So we can't foresee, if Trump's going to have a tariff battle with China, or if Iran is going to bomb Saudi Arabia, or what's going on in other parts of the world. So what we do is we try to control or monitor what we can control and monitor. But a lot of those things are going to create hiccups in the market. We try to take advantage of those hiccups. So here's what I mean. So what we do today is you'll see here, this is what we call the mortgage-backed securities market. Okay, this is a bond that trades. This is the element right here that determines mortgage rates. A lot of people are falsely informed or advised to watch the 10-year Treasury. And they're like, well, that's what mortgage rates are tied to. It is not. That is inaccurate. Okay, it is the MBS market, mortgage-backed securities. It's a bond. Okay, so this is what we follow. So we're going to chart. So this is the price of a bond. So when it goes up in price, thus meaning the yield or the rate of return or the interest rate goes down. So we want to see this going up. Again, this goes up is the price driving the yields or the interest rate down. We've had a nice little run in the market right now. And again, if you followed my markets or followed me right around in here, we predicted that I think they're going to stabilize and start going up a little bit. And they've done so because there's really not anything. Saudi Arabia was attacked by Iran. That had a little hiccup in the market, but that didn't have a huge effect on what's going on right now. We're back now to technicals. Okay, there's 2 elements that we watch in here. It's called the Fibonacci levels. So Fibonacci levels, it basically puts in gets us in trading ranges. So right now the Fibonacci levels are this level right here. This line is our floor. So that's where we, if it drops, we're saying it's going to hit here, and that'll be our stopping point. And our ceiling. So we're going to say if it goes up here, it is going to hit that and kind of stay there. And you can see many times it hits, stops, hits, stops. You might deviate a little bit from that, but it's hitting, stopping, but we usually trade in this range. So what's going on right now is we're having a nice little run in the market. This is awesome. Again, things don't go in, they run in cycles, up, down, up, down, up, down. So right now, here's what we're anticipating. We're anticipating still a little bit of run in here. Right here, you're going to see, I'm going to get rid of a couple of these lines. Some of the things we watch is the 25-day this is day moving average, DMA, 50-day moving average. So these are some technicals that we follow. So right now we're trading right above the 50-day moving average. Okay, so my thought is, see this line right here, is we're going to still continue to move up. But these averages are right here, and we're staying in here. I'm predicting that things are going to stabilize a little bit or go up just a little bit more because our technicals are bringing us back into line. So my prediction right now, if you're in the mortgage business, or you're a realtor, or you're a home buyer, or refinancer, cautiously hold. So what I get a lot of times is people will call me and they'll find me on YouTube or listen to my radio station, and they'll say, Dan, why you? And I always reference, I'm not a loan officer, I'm a mortgage advisor. This is what I do. I follow these markets every day for you. My best example is, if you're looking to invest, let's say you're buying a $250,000 home. Okay, let's flip that around. You're looking to invest $250,000. Are you going on to the websites, Google searching, finding the cheapest place, the fastest place to put your money in, and hope that you get good results? Probably not. So when you're looking for a mortgage, you might want to spend an extra. And I'm not saying my fees, my rates, everything is right in line with all the big players out there. The guaranteed rates, the Wells Fargos, my prices, my interest rates. I did 4 or 5 estimates today, and I beat them on every one of the occasions. Now, that's not always going to be true, but I'm right in line there. And what I try to say is, I will educate you on these things, put you into the right program, and time the market. Let's say, for example, your lender, and if I'm watching this, they locked you in right here. Okay, right here. Following the market, and you can watch me daily, I was expecting a rise in prices. Thus, again, up means up in price, down in rates, or down in yield. So they might have locked you in right here. Let's just say, hypothetically, say this rate was 4. Okay? I waited because I knew there was going to be a little run in the market. Now I got you 3.75. Let's say that 3.75 is saving you $75 a month. $75 a month times 30 years, that's a lot of money. So, let's say, for example, my costs are $250, $300 more than another place. Well, yeah, you might have paid that, but you might have saved $20,000 over the term of your loan. So which one of those is better? So right now my prediction is cautiously float, monitor this, because all we need is one tweet, one bomb, one drone to affect the market, and you can see a big reversal, or you can see a spike in rates or a complete drop in rates. Don't know. So that's what I do. I do this for all my clients. Most of them have watched me for years or heard me on the radio for years, trust me, and they give me a call and let me help them. So if I can be of any help to you, please let me know. Give me a thumbs up if you would, and also comment down below. I answer all my comments. I try to post daily. Many days is tough, and you might even see me posting at 8 or 9 o'clock at night. Because just the days get away from me, and I don't have enough time in the day to get a lot of this stuff done. So I thank you for watching. Again, please give me a thumbs up. If you'd like to reach out to me, you can call me at 844-775-LOAN. That's 5626. Or you can reach me. Email is dfrio, which is FRIO, at parksidelending.com. Thank you so much. But please subscribe down below. Leave me some comments. I'd love to answer. Take care. Have a great night.